Mr. Himes' question is for you first. What regulation or oversight would you favor to prevent an economic meltdown in the future?
We are where we are today because of a massive failure of regulation and oversight in the financial services industry. This is a very, very risky industry. I worked in it for 12 years, and I know how these firms respond poorly and well. What happened was our financial services industry grew and changed. It became international. It took on risks that, frankly, it did not understand, and our regulators and our oversight mechanism went to sleep. Chris Shays has admitted this. When he voted for the Gramm-Leach-Bliley Act, he said we didn't put in place the regulations that we should have. There are things like the credit default swap market, which is $60 trillion in size. The Commodities Futures Modernization Act, which my opponent voted for, required that that be unregulated. So what we need to do now is we need to simplify and streamline our regulatory structure so that our financial services sector thrives, provides loans to businesses, provides loans to individuals once again, but it does so in a way in which risks are transparent and controlled, so that never again, never ever again, do we find ourselves in the position of having to put $700 billion on the table. $700 billion on the table to bail out a private industry.
Mr. Shays.
You know, it's pretty amazing that my opponent, who was in this marketplace, and said when he was running so he could get on the Transportation Committee, now sounds like he's interested in our economy. He accused me of being on the wrong committee. I'm on Financial Services Committee, which is going to be directly involved in the solution on this, and the Government Oversight Committee, which is going to look at how we got into this mess. Well, I know how we got into this mess, and my opponent knows as well. It's called the housing market, with a huge bubble in it, encouraged by people on his side of the aisle to have people buy homes they couldn't afford, telling banks they had to give loans to people who couldn't pay them. That's what was happening on his side of the aisle. And we had Fannie Mae and Freddie Mac that were under Sarbanes-Oxley. When we passed that law, I said, finally they'll be under some regulation. But they're not under the 33 and 34 Act. So in 2002 and 2003, I put forward a bill that says they should have to be under regulation like everyone else. They securitized half of the housing market, $6 trillion, and nobody wanted to deal with it. The administration said we needed a stronger regulator. The Democrats, his party, were opposed to it and prevented it from happening. We finally have a stronger regulator. We have Fannie under the 34 Act, but the bottom line is we would have never gotten this mess if people had listened to what I was saying in 2002 and 2003.
Mr. Shays, let's stay with housing for a moment. Do you support a more direct program of relief for those homeowners facing foreclosure?
Well, the good news is we have two very important programs. One of the programs is called FHA Secure. And this program will allow individuals who were current at the original interest rate before their interest rate went up to be able to qualify for a 30-year FHA loan. That's what they are capable of doing, even if their credit is bad now because they didn't pay at the higher interest rate. And the second thing is we passed a major bill that says that the FHA will buy bank loans that are in default at 85% of the true value of what it was. So a home that had a mortgage of $400,000 was worth $500,000 is now worth $300,000. The homeowner can go directly to FHA, get a $256,000 loan, as long as the bank agrees to it. The bank gets out of it. They don't have to go into default. They don't have to sell the property for $100,000 or $200,000. And when this loan takes place and the property value goes up, the individual shares half of it and the bank shares half of it. These are two incredible programs. And this last program just began October 1st. This is legislation that was brought forward by the Democrats. I was the key co-sponsor on the Republican side. Frankly, I was the only one in the beginning.
Mr. Himes, relief for homeowners.
Well, this is a critical issue. American families just saw hundreds of billions of dollars made available to bail out an industry, and they all rightly ask the question, what is there for me? And I approve of the programs that Chris Shays mentioned, but it is very clear that we need to make some adjustments to the way individual households, and I don't mean all households, I don't mean people who got themselves into 5 condos in Florida in a leveraged way, but homeowners who are struggling to hold on to their homes need to be able to go prior to or in a bankruptcy proceeding and renegotiate that mortgage. Firms do it all the time. This is fairly standard practice. It has not been practiced in the mortgage industry, and if we would just make that available to homeowners, bankers, homeowners, and others would do far better. Now let me address Fannie Mae, since Chris Shays brought it up. Bear in mind that this is a little bit of a smokescreen. Fannie Mae and Freddie Mac did some bad things, and we should dig into what they did and make sure that it doesn't happen again. But the subprime market in this country is less than $1 trillion in size. The credit default swap market, which Warren Buffett called a financial weapon of mass destruction, and which brought down AIG, is $60 trillion in size. The investment banks, which were, after Graham Leach-Bliley, unregulated or voluntarily regulated, were leveraging themselves up 30 and 40 to 1. So Fannie Mae and Freddie Mac is important. And I'm glad Congressman Shays brought it up, because the reality is that first, and this may sound negative, but it is true, when Congress was voting in 2007 on a new regulatory structure, he missed that vote.